Before, I have been very strong in saying that not every dip is worth buying, and that is because buying a trash stock in a trash stock market doesn't help you. What is trash before can still be trash later. However, there can be some exceptions, and there are two stocks that I have to present to you today that might be proof of that exact concept, and they might be turning the corner right now. So, what are these stocks and why are they turning the corner right now? And should we consider investing in these right now? That answer might be yes. Let's go ahead and break it down. These are two stocks that, they have been trash. They have been utter trash for quite some time and for the better part of 5 years. And one of them ain't trash no more, and I think the second one is crawling its way up out the trash can. The first one is Dollar General, and for the most part, I would argue that it was a good reason as to why it had fallen off, and I think you can understand as to why it is turning the corner. So for example, let's just take this very easy to understand statistic here. Over the last 5 years, Dollar General has been down 47%. All right, let me repeat that. For 5 years, you would have lost nearly half of your money, 47% drop. Compare that to the S&P 500. The S&P 500, at the time I'm doing this recording, has been up 85%. You could have put your money in just a basic index fund, which, most of us are okay with doing, which I would put the majority of my money in index fund. You would have easily made 85% over the last 5 years. You would have lost 47% putting your money in Dollar General if you had done it the entire time. However, if you have been paying attention, this year has been a little bit different due to tariffs, due to a lot of different things. The stock market has been down for the majority of this year so far up into April. We'll see what happens by the end of the year. Now, here's the thing. Year to date, which means from January to about now, Dollar General is up 26%, which is pretty much the polar opposite of what the S&P 500 is doing. Why is that the case? Well, it's the same exact reason as to why Dollar General was good the last time it was good, and that was during the pandemic, which was the last time that we had a true recession. Now, is this a guarantee that we're going to be in a recession for 2025? No, but again, I've said this before, I don't think it's going to shock us if we find out that we are going to be in a recession. But Dollar General is known to be recession resistant, which is the term I like to use. Other people like to use recession-proof. I think it gives you a guarantee, and I don't guarantee things when it comes to the stock market. But here's the thing. We've known this, right? The same reason why I like Walmart is the same reason why I like Dollar General, but there is something that's even more interesting when it comes to Dollar General and when it comes to tariffs. If we are to go into a recession, which again, most of us do expect, people are going to trade down, which is why I did not like Target and haven't liked Target as a stock for, 3 or 4 years now. Target was known to be more expensive because we were dealing with inflation and things like that. People were trading down from Target and moving to Walmart. I've been telling you guys that for years now. Now, people have been shopping at Walmart, and now because of tariffs, some people are going to stay at Walmart, but other people are going to have to trade down even further and move to a Dollar General. But why is Dollar General even more attractive because of tariffs? Here is why. Number one, Dollar General sells more food or makes more money on food than it does items and goods. The food that we sell is usually locally sourced more and isn't tariffed or isn't impacted by tariffs more than it is from items. Most of the stuff is made in China. We don't get most of our food from China. Yes, we get avocados from Mexico. Yes, we may get, mangoes or whatever. I'm not the biggest food person, right? But we'll get avocados and certain things from those areas, but because you can't ship food from too far away, in most cases, we get most of our food from here. We are a large exporter of food. So Dollar General is going to be okay for the most part, and they are expected to see higher sales. That is why Dollar General is doing well and is expected to do well if this tariff season continues to go. Also, for traders and for those who are paying attention to momentum, meaning the stock is increasingly getting hot, right? The stock is growing a lot faster than what it is according to the stock market. It just passed what is called the golden cross, which shows that yes, this stock is gaining a lot of steam and is expected to do well for an extended period of time. Again, is that a guarantee? No, but it is an indicator that yeah, there is something behind the stock, and that just happened on April 21st. So very recent. If you are to get into this stock, this might be the beginning of something that could be special. Now, I'm going to tell you this, all right? Not every stock that I talk about, not every stock that we mention here on the channel is the best thing ever, okay? I'm not perfect, but I am right more often than not. We've mentioned NRG many times. I told y'all about Walmart. I told y'all about Chipotle before it split, and it did quite well, and then we hopped off of it when the CEO left. I told y'all about Netflix, and boy were we right about Netflix starting back last year prior to the election. Maybe Dollar General is next. Maybe. I'm telling you now in April, okay? We'll see what happens after this, all right? So, telling you about that now. Here's the other thing you want to know, tariff related, about Dollar General. Dollar General ships very small amounts. I mean, they're general stores. They're not massive stores like a Walmart. So while Walmart has to adjust its prices, figure out what they're going to do about, holding these massive storehouses and warehouses of stuff and paying tariffs on those large amounts, Dollar General doesn't actually have that issue. These are smaller amounts of items, and again, they sell more food, which isn't hit by tariffs, than they do with a lot of these items. So that is something that's going to help Dollar General as well. You can copy and paste a lot of these same arguments for our second company as well. That company is Dollar Tree. That stock symbol, Dollar General, by the way, that stock symbol is DG. Dollar Tree is DLT. Now, I was a big fan of both of these companies back during the pandemic era. Now, while I don't think that all of the pandemic stocks are going to come back right about now, but these two might be one. And I will tell you that while, yes, a lot of the tariff arguments can be copied and pasted here, I'm not as confident today, okay? I'm not as confident today as I am about Dollar General, just because it doesn't have the same amount of momentum behind it. One other thing about both of these is today, at the time I'm doing this recording, both are under $100. If you decide that you want to do any options around these, especially cover calls, there is a case, though it is more risky, okay? Though it is more risky, there is a case that you can do some cover calls behind this. Now, Dollar Tree is around $80 or so. Dollar General is closer to $95. So if you want to do it with Dollar Tree, your time is limited. Though you can do it above $100 a share, but you will need more money to do that, okay? So just throwing it out there. But Dollar Tree over the last 5 years is actually up, okay? It's actually up about 8%. But again, 8% for Dollar Tree over the last 5 years versus 85 for the S&P 500. So, index funds, they still work. All right, so that's something that you do want to pay attention to. But over the last 6 months, you've got Dollar Tree up 19%, and then year to date, it is down 2%. Now, again, year to date being down only 2% compared to where the S&P 500 is for year to date, it's still better than where the stock market is as a whole. Now, if you were to look at a chart for Dollar Tree, you'll notice that it is inching its way towards, I would say, positivity, if you will, meaning it's negative now, but it looks like it could become profitable from an investing perspective. Now, I haven't gotten that golden cross confirmation as an investor, which says, yeah, I truly believe more in the stock in the same way I have more confidence than I do for Dollar General. To give you context, if I were to put my money on the line and I had to only choose one, then I'm going with Dollar General if it's my money. Except there's one thing. There's one thing that happened with Dollar Tree that makes me want to reconsider. Okay. And that thing is, yes, I think Dollar Tree is on its way. And this could be the early phase. Like, I still think you're right on it. If you're looking at Dollar General and you're like, hey, I think I can ride this and be very good, right? And Dollar Tree just hasn't hit that confirmation. It just hadn't hit the button yet. You're not on the ground floor. You're in the basement building your way up, and you are almost there before things take off. Maybe that is it for Dollar Tree. But here's what come closer. Here's what I noticed. The CEO of Dollar Tree bought 17,000 shares just last week. 17,000 shares of Dollar Tree just last week. And what do we always talk about when it comes to insider buys, insider investors? They know more about the stock and more about the company than we ever will. And when the CEO buys, and when you have more insider buyers than you do anything else, that tells you something, that they have confidence in the company. There's only one reason as to why they would buy. It's because they think good things are about to happen. Now, yes, we see Congress people buy, right? And while Nancy Pelosi and others may be better than the average investor, okay, nobody is going to know more than people running the business, okay? And while I wouldn't take that and say, well, that's the end all be all, right? But that is a very big confidence indicator for me, okay? So you can weigh those and continue to do your research to see which one you would believe in most. You can invest in both of those. Why would I personally not invest in both of them? Because they have the same arguments, right? And if, let's say I'm wrong, right? Let's say that my theory is wrong. Let's say they revoke all the tariffs and everything goes back to normal. Unlikely, right? Unlikely that the world heals overnight, but then I would lose money on both stocks. If that were even the case, I'd rather diversify, get one of these, and then put my money in other places. That's just the way that I am looking at it. So I personally would not invest in both. But again, your portfolio is your portfolio. Your risk is your risk, okay? But you can pick and choose. You can go with the CEO, who knows more than me and you, and put your money there, or you can go with what you're currently seeing. You got a track record, though it is short, it's only 4 months into the year, going on 5 months, where you can see, hey, at least this year I know this stock is up or has been up 26% and perhaps counting. And then you can see a stock that might be on its way up, and the CEO at least put money into it just a few weeks ago. And I think on the day, or at least the day after or so, the stock jumped 6%. So the market has noticed as well. So you might be on the basement level, building your way up with Dollar Tree. You might be on the first thing smoking as we are moving with Dollar General. They both have dollar in the name, so they both confuse them. I think both stocks are very good and moving in the right direction if things are moving in the way that we expect, at least for recession and some rough, turbulent times. The good thing, though, with both of these stocks is it could fit in an overall portfolio. What do I mean by that? We've talked about tech stocks, right? We talked about, Netflix. We've talked about energy stocks, and we've talked about, index funds and things like that. So now you have your tech, you have your retail, you have some defensive stocks, and you've got different places to go with your money. So this can be something that can be part of a well-rounded portfolio. If you want to know more about building a portfolio and investing in times like this, then this is the video that you want to check out next.